trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi, everybody. Good evening, good evening. Good evening to you. All right, I'm just getting ready here. A lot of stuff going on here this evening. I'm not sure why. Okay, all right. It's been a beautiful day here today, and just ran over to my granddaughter's 8th birthday. You can't miss those, folks. Okay, you will never live it down. Anyway, let's get started. There we go. There we go. All right. Okay, my name is Hugh. And how do you do? All right. Okay. My goodness. I see a lot of people still joining us, folks. A lot of people are still online here. And I believe we are going solo here tonight. Aaron's off on vacation. I think he's still coming back. He was in Iowa last week or so, and he's on his way back. So, but anyway, you're there, we're here. That's all that matters. And folks, come on in. Lots of room right here in the front here as people are still joining us. So while we're waiting, a couple of things I just want to mention. First of all, this is going to be recorded. I'm going to start the recording right now. As a matter of fact, here we go. Where did I go? Where did I go? Here we go.
Recording in progress.
All right. Welcome to DayTradeSPY.com's weekly fireside chat. Introduction to trading, week in review, and my name is Hugh. And again, we're going solo here this evening. Maybe Aaron will pop in. We'll see if he comes in a little bit later on here or not. So it'll be nice to see him or hear him. So a couple of things, a little housekeeping. If you are new here, please let us know. All right, there's a questions box. You'll find a little questions box icon on your Zoom dashboard. Just click on that. I'm the only one that sees that, so go ahead and say whatever you want. And certainly look forward to perhaps answering some of your questions here. I know at the end we're going to address a few of them anyway, and hopefully we'll get to as many as we can. The other thing is sometimes I get very passionate about what we talk about here tonight. What we discuss, and I get very excited, and I tend to speak a little bit too fast. If you find that is the case, please let me know in the questions box. And in the same vein, then if I do get into anything technical that you do not understand, don't worry about it right now at this point. You're really not missing anything. All right. It's basically going to be like an introduction to trading, sort of a very general, brief overview as to what happened last week, and a little more emphasis on what's coming up in the week ahead. And we're certainly looking forward to that. It's always where you're going that's more important than where you've been. Although that said, where you've been is very important too, obviously, because that's kind of where we determine we're going to go, right? How prophetic, right? Anyway, all right, lots of things going on here tonight. So let's get started. See, all the questions are already coming on here. Let me see. Okay. I love this guy, Bob the math guy. I don't want to get too much into detail with some of his comments here, but he's talking about he's got to do never mind about the colonoscopy prep, and he's have to go drink that stuff at about 8 o'clock. Okay, well, more than that. So, and of course, Doug, he's asking for the dancing girls at the end. Yes, we've got those. We've got the dancing girls at the end here. So. All right, let's get started. Yeah, we have fun here. All right, this is a casual night. We have fun. We sit around. Some people like to drink their, imbibe in their favorite drinks. I'm stuck with, Perrier water. That's good enough for me. So anyway, let's get started here. It is Sunday, April the 21st, 2024. And again, there's a questions box. You'll find the little icon on your Zoom dashboard. Go ahead and say whatever you want. I am the only one that sees that. And if we're lucky enough to have my cohort Aaron on, then he'll see it as well. All right, and I think with a little bit of luck here, you'll actually get a picture of me in here too. So anyway, my name is Hugh, and again, and welcome. All right, so here's the disclaimer. I'm going to be quiet for and give you half a second to read this while I adjust my camera. Okay, there you go. You alone are responsible for all your own trading, and past performance does not guarantee future results. If it could, it would, we would, but that doesn't happen. So, all right, folks, there I am, live living color, and I am your host here tonight. There's Aaron. There's a picture of Aaron, but I'm going to just tell you a little bit about myself here. From those of you who, first of all, if you're new here, let us know. All right, if you're new here, put it in the chat box that you are new. And if you're also new to trading, let me know that too. Kevin, welcome. Ranjit, I hope I pronounced that right. Welcome. And Michael K, welcome. Okay, let me see who else. Okay, there's a lot of questions here. Jonathan B, welcome. Omar, welcome. Greg T, Ed S, good to see you here, Ed. You made it. Been back and forth with him on some emails here. Stephen T. Let's see. Yes. Okay. All right. A lot of stuff here. A lot of stuff. Okay. So, and we're going to get to some of your detailed questions a little bit. Anyway, AK, I came from corporate America many years ago. I used to work for an insurance company, internal audit. I understood what risk was, comfortable with numbers. What I wasn't comfortable with was my financial advisor, having given him a lot of my money, my paycheck to invest for my retirement. Wasn't very impressed when I realized that he had blown half of it out. By the time I realized that I should have been on top of it, that's my fault, but I wasn't. But anyway, I even wrote the company president a letter thanking him for screwing me, because if he didn't screw me, inadvertently, I'm sure he didn't mean it, but I never would be doing this now. So because of that negative part of my life is how I became successful. So I think there's a lot of truth to that. For every dark cloud, there's a silver lining, or whatever the saying is, and got to go to hell before you get to heaven, or whatever those sayings are. But I think there's a lot to it. Anyway, because of those, because yeah, so I would hand off a lot of my paycheck to my financial advisor to invest for my retirement. That's the story here. And one day I woke up and I never bothered to open the envelopes until one day I thought I better just be pleasantly surprised, right, at how much money I've got. Well, was I ever in shock when I realized I only had about half the capital I'd put in. And of course, a couple things struck me. Number one was, let me see. So if I figure out how much money I worked for, probably less than minimum wage. And what was I doing here? I entrusted my friend Mike. He's my friend, of course. He's always your friend, right? I entrusted him to move my account forward and provide for me a nice retirement income, but that was never going to happen. But I think what struck me most is the realization that my kids may not go to college. And I was not going to let that happen. I wanted to make sure that they go to the best universities that we could, and everything else. But when I realized there was not enough money in there for that, I thought, you know what, I'll be damned if I let that happen. If I have to take on 4 or 5 jobs, I will make that happen. I'm not going to deprive them of an education because I made the mistake of giving my money to this guy to invest, and I take full responsibility of that. So I essentially called him up one day and said, Mike, cut me a check for whatever you have left. Obviously, I have to learn how to do this myself. And literally, with the power of the internet, we have all the information right here at our fingertips, just as much as anybody else. Me, you, everybody, we all have all of that information that we need to make money right there, all 8 fingertips. I'm not counting the thumbs. We'll count the thumbs too, 10. And I set out to learn as much as I could. I took all these different courses, and many of them I'm sure you've taken as well. But what I really learned was when I did this myself, and I realized a lot of things along the way, and there's a lot of things they don't teach you in these courses, probably because they don't know, probably because they don't trade themselves. You see, you have to actually trade to learn how to do this. If you don't trade yourself, you're only going on theory, right? You're only going on what's theoretical. And real life trading is not the same, as I'm sure you are aware. Anyway, I realized a few things that worked, and I started with equities, looked at futures and forex and a few things, and discovered options on companies first, and then eventually options on SPX, and then options on SPY, SPY. And when I discovered that on this one stock, one strategy, 1 hour a day type of thing, I realized, wow, this is really cool. I don't have to analyze the whole market and sectors and companies and all this other stuff that spend hours and hours. I used to be part of other groups too, and I remember we'd have our various assignments, every Sunday night we'd get together for a couple hours, and then all day Monday through Friday, right, 9 till 4 o'clock, and then 2, 3 times else in the week we'd be getting together, on Zoom to discuss markets. And it was a very consuming kind of an endeavor. And the funny thing is, I don't think we ever got any better. I mean, you might think the market's going to go up on a particular trucking company or something on a Sunday night. Well, what do you know? You don't know what's going to happen on Monday, Tuesday, Wednesday, or Friday. It's just, it's a shot in the dark. And we used to have these assignments. We all had our companies and sectors and everything to look at. And frankly, I don't even know if we knew what we were looking for. I sure didn't. So I would always report in, I've got nothing, I've got nothing, I've got nothing. And I remember now vaguely most other people did the same too. So anyway, long story short, when I discovered this thing on day trading SPY options, all right, in and out, in and out, in and out, and I started making some pretty serious money. And of course, my life changed. Obviously, I don't work for corporate America anymore, and although I do again, but that's a different story. Um, I started bringing home the toys. All right, lots of vacations, new cars, new house, new airplane. I like to fly it. People started to take notice. He says, Hugh, you obviously won a lottery. You want to play my numbers? No, no, no. I'm trading SPY options. Well, can you show me? Can you show me? And that's when this whole business started quite by accident, and that was 2010. We are now in our 14th year of doing this and very excited. And in fact, I'm still just as excited today making money as I was when I first learned, even more so than when I first learned, because now I know more and I truly can anticipate markets. And when you have this knowledge and experience, it's like, I mean, it should almost be criminal. But anyway, that's my story. And I've been teaching people now again, so like I say, in our 14th year, teaching people how to do this. And it's a lot of fun. I enjoy, and I thoroughly people say, well, why do you bother doing it when you can just make money? Well, at a certain point, it's not just about the money anymore. I mean, yes, I can make money trading, and I do make some money trading. And I've scaled back quite a bit because after, like my wife said several years ago, rough for a birthday dinner, my birthday, she said, you're still trading all this money. Why do you do all this risk? Why do you have to go on risk all the time? It's not like we need it, when your mortgages are paid off, the cars are paid off, kids are finished school, all their education's paid, all this stuff. Why do why don't you just trade a little bit or something? So, okay, fine. Well, that kind of makes sense, right? The reasons for me trading heavy sort of dissipated when I actually don't need that money as much anymore as I did then. But a lot of people ask that question. But the real answer is that I thoroughly enjoy teaching other people, and I thoroughly enjoy, I get a real charge out of seeing other people's success. That is the reason both myself and Aaron do this. All right. Aaron's a successful trader in his own right. He first started trading as a kid. When he was in high school, when all his friends would be out there, running around and playing sports and chasing girls all through high school, you'd find Aaron in the library, in the school library, flipping through the Wall Street Journal. He'd be studying charts and technical indicators and stuff. He opened his first trading account when he was 17 years old. I'm thinking to myself, oh my gosh, I got into this game a little bit late. I think it's 17. I might still have been climbing trees. I'm not really sure. But anyway, Aaron mastered, not just learned, but he actually mastered this deep dive technical analysis. And he's a former technical analyst for a $150 million commodity fund. And now he just identifies these high probability trades. So what happened was, I guess probably about a year and a half ago or so, We were taken over. It was a friendly takeover by Eagle Financial Products, part of Salem Media Group, and they so they brought on this new guy, Aaron. They scooped him out of this fund, brought him on, and he's part of our trading room. So you can just envision this. I'm pretty successful with what I do with my indicators, and Aaron's also pretty successful with his indicators and the things that he does. And now, when you marry them together, his indicators and my indicators, we have a saying. It goes something like this. It says, when our indicators unite, our trades ignite. So if he says the market's about to break out to the upside, and I'm looking at it and I assess that, you know what, the market's about to break to the upside, you probably would be wise to buy call options, all right, because it looks like the market's probably going to be going to the upside, right? And I think that's kind of important. So anyway, that's kind of what we do. Aaron is an excellent trader, and we have a lot of fun every morning in the trading room. So you can imagine now. Now he's much younger than I am. Yeah, he's about 41 years old. I'm 69. Been doing a long time, and you can tell with the gray hair. I should also, too, at this point in time, maybe mention to you that I taught my kids how to trade. All right. So they're both educated, by the way, good schools. Right? They're both educated, and they're very successful in their own respective careers. All right. And but whenever they need money, they know to go to the stock market. My son, he's married, three young girls. He just had delivered Friday. Friday it was brand new 2024 SUV. It's a Suburban or something. Anyway, I'm gonna have to take a look at it. Anyway, they just simply go to the stock market. So now my daughter, she was never a world traveler, but I remember after college she said, "Oh, I'm going to go to Thailand to teach English as a second language." Yeah, sure you are, sure you are. I didn't believe it until I was actually driving to the airport, tickets in hand. Dad, I'm going. I guess you really are. Whole new culture, no new language and everything else. And she loved it. She absolutely loved it. And she liked to travel down there. She'd go to all these different places and she'd check into Vietnam and Myanmar and stuff. Is, oh my gosh, what are you going in these places for? I'd always ask her, say, Lex, how are you doing? You need some money? She said, no, no, Dad, I'm okay. If I need money, I'll just go to the stock market and pick up a few bucks on SPY. Okay, sounds good to me. She told me, yeah, the American dollar goes really far down there, and didn't need to make a lot of money, but she was very good on her own. Then, so see this hair, folks? It used to be brown and lots of it. So after when she went down to Thailand, it turned white, as you can see, or gray. I like to say white, more distinguished. And then when she came back, she announced that she wants to go to Peru to do the same thing. You can imagine the horror I went through thinking that Peru. Oh, okay, here we go. What Pablo Escobar and all these guys, these drug lords and stuff. Are you kidding me? But she went down there again, same thing. Like, do you need some money? No, I can just go to SPY and take it whenever I need it. And she loved it down there. She even vacationed down there, Colombia or somewhere. I couldn't believe it. And then when, of course, she came back from Peru, I lost most of my hair. So from lots of brown hair to very thin gray hair because my daughter, but she loved to travel. And whenever she wants to make money, she goes to this, SPY. She goes to the stock market, which is very liberating and comforting for me because I know that they know how to create their own wealth if and when they need to or want to. And I think that's one of the most important things about what we do. Folks, so we got this newsletter here. It's called Spy on the Market. Now, I know most of you are probably subscribers. If you are not, you might want to join us. All right. It's actually pretty cool. All you have to do is go to the website, daytradespy.com. Let me see if I can pull it up here and simply um, subscribe to one of those things, those tabs on the right side. I think over here. I show these to I don't think you'll see this. I think you'll see it a different way, but the daily payout plan, I think if you just click on this, or one of these, there's going to be a couple things to subscribe to or to download. All right. leave your name and email address, and you will automatically get on this Spy on the Market newsletter. It goes out every Thursday morning. It's a very quick read, only about 3 minutes. All right. It's a very quick read, and it's something that, I write. I write this, and it's very light, relevant, entertaining even. And you'll find a lot of people really enjoy it. So last week, we had the topic borrowed from the aviation world. I talked about the I'm Safe program that the FAA came out with. And pilots use this to determine if they are suitable to get in the cockpit of a plane and take off. And I tailored that to the trading world. And you'll find that if you are in our trading room or whatever, that you'll find that there's a lot of similarities and a lot of analogies that I use with aviation. So this was actually pretty cool. A lot of people really enjoyed it. I got a lot of good comments on it. This week's topic coming up, sell in May and go away, not for day trade spires. So if you're thinking here, well, May's coming up, supposed to sell in May and go away, I think I'm going to hold off until the fall before I get into your program. Read this week's article and you'll see why that is a really, really bad idea. Anyway, spy on the market. All right, we send this out. It's only like about 750 words, 3 minutes to read it. Not a bad deal at all. Tonight, we're going to be talking about a review of last week, preview of next week. I'm going to update you on the 2 to 10K challenge. I've got a 2-minute tutorial, really pretty cool. A lot of people like that one too. And we've got a Q&A session coming up a little bit later on. So right now, let's get to it. Well, what happened last week? Well, Monday, we had retail sales, New York Manufacturing Index, all inflationary. The numbers that came out were all really good numbers for the economy, retail sales and New York manufacturing. I think they blew the forecast, the New York, or they call it the Empire State Manufacturing Index. I believe it blew the expectations, the forecast numbers right out of the water. So it was good for the economy, except there's one little problem. If it's good for the economy these days, that means it's a threat to the Fed Reserve's wanting to cut interest rates. They're not going to be in such a hurry to do that. So when these numbers came out, investors and traders said, oh, not so fast. This is not good. They're expecting what, 2, 3, 4 interest rate cuts this year. I'm thinking here might not happen. It's going to stay higher longer. Anyway, the market dropped here approximately, oh my gosh, what about 10 points or something, 10, 11 points very quickly on Monday. On Tuesday, we also had some housing numbers. They came in lower than expected, but Fed Reserve members commented, and these people were hawkish, and they were talking about exactly what I just mentioned here, what happened on Monday. They said, I think we're not ready to drop interest rates yet. We're going to stay high longer, and we're just going to wait and see until interest comes back down, or rather, inflation comes down to that 2%. Several Fed members spoke here on Wednesday of prolonging any interest rate reductions, again, until inflation reaches 2%. The market still came down. We dropped another several points here, I think about 6 points here on Wednesday, as the market kept stepping down because a lot of these hawkish Fed members. So hawkish means they favor high interest rates, elevated interest rates to curb inflation. Dovish means they want to reduce interest rates. So a lot of these Fed members, like I didn't see any dovishness about this at all in the last little while. They're looking at the inflationary numbers, and we're going to have some numbers coming out this week. So these are the numbers that they gauge their forecasts with, and whether they should bring it down or not. Now, for the longest time, they've been trying to get this inflation down to 2%. And that last mile seems to be the hardest to reach, right? So it's like, I guess if you're in a marathon, I think it's that last mile that's the hardest to run. Anyway, that's that, and they're definitely working on maintaining interest rates as long as they need to bring inflation down, and it's reflected in the stock going to the downside. Thursday, we had unemployment claims, the Philly Fed Manufacturing Index, existing home sales, and some more hawkish Fed member speeches brought SPY down to its knees to the lowest level since mid-February. We bottomed out right here, just a hair over 492. And after market trading here, dropped down from what, about 504 to 492. What's that, about 12 points here, which is huge. So we had quite the drop from about, what's this, 515 down to, what's this, 492 in just a few days. That's a $23 drop. Not good if you're sitting in calls, right? And that's kind of where the market was going to go. Now, Friday, we had inflation and Middle East geopolitical pressures. This too is actually weighing very heavy on the market. The reason is because, especially now with Iran looking to get into the mix, and they're lobbing bombs and drones and stuff across over to Israel, and Israel's retaliating, and so there's this threat of rising oil prices, which leads to what? Rising inflation, right? When oil prices go up, transportation costs go up, everything goes up. There's your inflation, and therefore the stock market does not like that, so it goes down. We also had some very strong technical indicators here, keeping SPY low, despite several attempts to break that resistance to go back to the upside. We wrapped up the Friday there around 495.16, kind of a low day. So that's what happened. From a seasonal standpoint, this is a seasonal chart. That blue line at the top is where SPY is now, and that red line at the bottom is a composite of the last 5 years closing price on the daily chart. Okay, and it's kind of nice to know where the seasonality is, the seasonal charts. Doesn't mean we're necessarily going to follow that. Excuse me a second here. My mouth is getting dry, so there I am drinking my water. Doesn't mean that SPY is going to follow the seasonals, but it gives us kind of an indication as to where the market was in the last 5 years, and sort of a look into the future, if you will, if the market continues in that path. It's kind of nice to know that. Stocks have seasonalities with them, and if we're not seeing any real move one way or another, just kind of nice to know that. And if we can follow on that path, again, it could just reinforce our decisions during the week and during the days, right? So historically, SPY dropped about 3 points over the last week, and historically, again, seasonally, SPY rose about 3 points with the week coming up, and that's kind of nice to know that too. All right, so last week, what happened? Volatility returned. Volatility returned, closing lower for the third straight week for the S&P 500 and the fourth straight week for the NASDAQ. SPY lost about 5.5% from recent highs, and we have a trifecta of recent data and news. The market repriced Fed rate cuts. Now it's expecting only one cut in 2024 versus, I think, probably about 3 of them earlier, not too long ago. Geopolitical tensions in the Middle East, upward pressure on oil and commodity prices, and we also have earnings. S&P Q1 earnings well underway. Just want to change something here. There we go. All right, let me go back to this. Q1 earnings well underway, and despite the fact that they are generally beating the expectations, the future outlooks of these companies are softer than expected. So what you get is, the C-suite people having their conference calls. They say, well, yeah, we had a good quarter, but we don't know if we can maintain the next quarter, or we see some challenges coming up or whatever. So that is the future that people are banking on. And for that reason, markets are tending to come down a little bit. So it's a little bit softer than what the Q1 was. Market volatility is still, after a strong run, still expected here. Corrections, there could be a 5 to 15% range. That's typical. So we may still see stocks coming down. Last week, S&P dropped 3%, but we're still up 4.1% year to date. NASDAQ, same thing. We're only concerned about the S&P 500, but I put these other indexes up there to give you a comparison. NASDAQ, the tech-heavy NASDAQ, dropped 5.5%. Year to date, they're only up 1.8%. And the Dow, pretty flat. Year to date, only up 0.8%. And that is the reason I like to trade the S&P 500, because they are generally still going very strong. they tend to outbeat the other indexes. Indexes or indices, however you want to say that. And I like that. So one of the reasons we trade the S&P 500 is because not only it cuts down on analysis time, but it represents the biggest cross section of stocks out there, the top 500 stocks. All the sectors are represented in this thing. All right. It's not like, you have to watch for the sectors. And unlike, say, the NASDAQ, which is really heavy in the tech. So what you find is that a lot of the tech companies are very much overpriced. And whenever there's a threat to the economy or, say, again, the geopolitical situation, you'll see cash, you'll see money and funds flowing out of the stock market and into safer havens like gold. So what's the first to go? Well, the um the what is it want to call it here? I'm just doing something here. The tech heavy stocks, right? So it's not uncommon to see the Nasdaq drop very, very much, very deeply, and it's huge. So this tells me that the world is concerned about the Middle East crisis and oil. So they're taking their money out of the equities and putting in the safe harbors of gold and that sort of thing, and oil and that kind of thing. So that's the first to suffer all the time. The overvalued stocks on the Nasdaq. The Dow, well, it's just there. All right, moving along. The week ahead, what do we have coming up? On Monday, it's going to be another low or no news day. Not much going on Monday. On Tuesday, we've got a flash manufacturing S&P Global flash manufacturing PMI report, and also a flash services PMI report. I think it's called Producer Manufacturing Index. I want to check to make sure I have the terminology right before somebody asks me, and I step into put my foot in my mouth here. Sometimes I just have these flash um, lapses in memory. Purchasing Managers Index. That's what PMI stands for. Purchasing Managers Index reports. Richmond Manufacturing Index and new home sales. That's coming up on Tuesday. On Wednesday, we have durable goods orders coming up. And these are all very telling as to how the economy is doing and by extension, what they can expect for inflation. Thursday, unemployment claims, our weekly unemployment claims report, advanced GDP, all right, and pending home sales, gross domestic product, and pending home sales. Friday, personal consumption expenditures. This is one of the Fed's most favored indicators that they use to determine whether they should raise rates, hold them, or drop them, or whatever they do. Those numbers matter. Personal income, personal spending, University of Michigan reports these. We also have consumer sentiment and inflation expectations. And we have earnings all week, including Tesla on Tuesday, Meta, which is Facebook, on Wednesday, Microsoft and Alphabet, which is Google, on Thursday. And these are all part of what they call the Magnificent Seven. So these are going to be some big movers and shakers, but we're going to see if these earnings, and depending on, of course, what they say with the earnings, if that's going to move the market or whether these other news items are going to overshadow. I find that the inflationary type news reports overshadow what the earnings are like. Now, that could have also been a function of the Fed members speaking, which is what they do. They'll talk it up, right? They'll say, "Oh no, we're not gonna lower interest rates. We thought we would, but we're gonna wait and see." And that's very detrimental to the economy, or to the stock market, I should say. The economy might like it, but the stock market, they're not too crazy about that. They're not going to raise the market because if interest rates are going to remain high. So volatility could be fairly low on Monday, elevated on Tuesday, moderate volatility on Wednesday and Thursday. You can expect elevated volatility on Friday. Trade with extra care Tuesday, Thursday, and Friday. I always like to tell people, trade small, trade often. Get in there, make your few bucks, get out. Get in there, make a few bucks, get out. All right. Folks, we have opportunities every day. Every day, the stock market gives you plenty of opportunities to make money. If you want proof, just go do some back Look at the back testing on some of the stuff. You'll see just how much money you could have made trading stock options. And then you'll slap yourself in the back of the head and say, I can't believe it. If only I got in here and I got out there. If only I got in here, got out there, right? And I've had people, we have some participants making every day double-digit daily gains. And that's all they do. They get in, make a few bucks, get out, do it again, do it again, do it again. We've got some incredible success stories to tell you, but I'm not going to, tell you that all here tonight. Maybe we'll save that for another time. Um, but we show you how to spot them and how to trade them. Okay, so we show you, we teach you all that stuff. We like to teach you how to fish rather than just throw you a fish every day. Now, if you want to fish every day, we've got that too. All right, so we have this thing called the 2 to 10K challenge. I'm almost a little embarrassed about this right now, but on the other hand, I am going to take on this challenge and I'm going to bring this baby out of the fire one by one, one by one. We are not going to give up. So what this is round three. The first two rounds did incredibly well. We took $2,000, turned it into $10,000 in 3 months. First one we did, I think April to July or something. And then the second one went from what, September to December. And this one here started at the end of January. And I had some bad losers. And I can tell you how I had some losers. And what I'm going to do is those people. So this is something we do in the trading room. Every morning we do this in the trading room. So what I'm going to do is at the end of April, we're still going to see where we are. Still got another week or so. We're going to see where we are with this. And and then we're going to provide you with a complete assessment as to what happened and the lessons learned from this. And that is going to be extremely valuable because I think that when you understand the lessons learned, if you can learn from somebody else's mistakes so you don't have to make them yourself, you're going to be so much further ahead in this game. But we've had some success here. Okay, so we actually ended up taking some real hits. Got too aggressive. Most of my hits came from being just simply too aggressive on the stock market, and that's exactly what happened. Knocked us down, but we're slowly climbing out of the soup. I've got down to $752 to work with. Been trading one contract. So now instead of going for big bucks, I'm going for safety. Just going for safety, and we're doing quite well. Friday, I was a little bit underwater. I didn't want to hold it over the weekend. Didn't want to lose some theta loss on that. So I took a little bit of a bath on that for $49, but we're going to work on getting it out of the water, okay? Inching our way out of the hole with safer, longer-term trades. And I think that's really important. That just goes to prove that, yes, you can make some very serious money day trading 0-day expirations. In other words, options that expire today at the end of the day. You can make extreme huge sums of money, but the risk is also there. If you want to minimize risk, you have to buy further out. You have to buy further out in time. So you don't get much of a theta loss, right? The time loss. We do have rules with this. And it'd be nice if I could have, I guess, probably followed the rules a little better. But started with $2,000 to only trading the profits as they settle, only using a cash account. Pattern day trade rules do not apply. And I do not have a cushion with which to repair these trades. These trades are not repaired, okay? Buy first, then sell, calls and puts using our standard setups. There are no spreads, no naked positions, nothing like that. Simply buy first, then sell, calls and puts. And as you can see there, as you saw, we track it on a spreadsheet. Results are reported in the inner circle follow-up every day as well. We record the gains and the losses net of commissions, which is $1 a contract. That's what I pay on Tasty Trade, up to a maximum of $10. Our goal, $10,000. Well, now we're going to see what it's going to be at the end of April. And again, even if it's a loss, there will be lessons there that will long-term gain, mean some long-term gains, all right? So all is not lost. And this is all executed in our live daily trading room. So you don't want to miss it. So people ask sometimes, well, what about your own personal trades? I'm going to tell you, I'm just going to show you my trades on Friday. Now, I didn't record here. I didn't show you how many contracts I'm trading. I don't want to sort of embarrass anybody or make you feel, oh, wait, so you're trading that many contracts and I'm only trading one or two or whatever. I'm just showing you these were real trades done on Tasty Trade. As you can tell, this screenshot is from Tasty Trade. Tasty Trade does not have a simulated account, so everything I show you here from Tasty Trade is actually real. But again, I eliminated the actual number of contracts. But here's what I want to show you. On Friday, I got in here at 9:33, out at 9:46. In 13 minutes, I picked up 37 cents from 4.93 to 5.30. All right, that's a pretty good gain. Jump back in here at 10:25. I was out a minute later at 10:26 for another 18 cents. $1.62 to $1.80. Now, if this had only been 10 contracts, all right, if this was only, it wasn't 10 contracts, but if it was only 10 contracts, your trade number one, you would have recorded a gain of $370 on an investment of $4,930, 7.5%. Trade number two, you'd have made $180 on an investment of $1,620 for an 11.1% gain. And here's the beauty. I love this part, done by 10:26. If I remember, most corporate America goes for their first coffee break around 10:30. So imagine this, you're calling your friends down. Okay, let's take a break now, and leave our cubicles, right? Get the elevator. Everybody clambers into the elevators, and now down we go. Anyway, folks, this here is nothing to sneeze at. Even if you just did 10 contracts, you're making what, $550 a day? That's $143,000 a year. And you know what? If I did this the right way, I would have actually had another zero on this, and I'm going to fix this right now. There it is right there. $143,000 a year if you just did this. Anybody here would like to do that? Just let me see if there's some interaction here. I want to make sure how this works. All right. Okay. Oh yeah. Lots of it. Would love to do this. Would love to show us how. Show us how. Sure, why not? Yes, that's awesome. Okay, cool, cool. All right, so let's take a look at the next thing here. Here is our 2-minute tutorial. This is a segment we started several weeks ago. Very, very popular. And thank you for that. All right. This is what kind of keeps us going. So here's tonight's question. Why you should never chase the option? I guess it's not a question, it's a statement. Well, odds are you will get it. You'll get it filled, okay? But at a higher price and when it's going the wrong way, not what you want. Let me give you an example. It's better to give you an example on this, all right? So let's take a stock. Here it is, the stock. Typical, this was 419. This is what, Friday's trade. Take a look up here. I'm going to see if I can actually, so all up in here. Oh, wait a second. That's not working. It's dark on dark isn't going to work. Maybe white on dark. Okay, is this, oh, you know what? It helps if I do it on the right screen. There it is, right there. Okay, that's what we're looking at. In particular, this here, right here, okay? All right, so at that price, the stock was $504.95. Went up and down, went up and down. And then it returned to that area over here where it hit actually even higher. It's kind of a double top, I guess you could say. It even went higher. It went up to 510. All right. So we're actually 15 cents higher. The stock went 15 cents higher as a double top up there. So from 9:58 to 12:51, there's probably about 3 hours there. 3 hours. All right. So that's the SPY stock. Now, here is the corresponding option. This corresponding option. This is the at the money 505 calls. So the strike price is 505, okay? That's it right there. It's the at the money option. Well, at that time, 9:58, the option was valued at $4.23. But take a look at the next level where it hit 505.10. So the stock went up 15 cents more. So you would expect the option to be at least that much and slightly more. And take a look where it was. It was only at 405 at 1251, same as the stock. At 1251, stock was 15 cents higher than the first point there, and now it's lower. The option is lower by well, it dropped what, about 18 cents, right? Instead, the call option dropped 18 cents. Instead of going up, it dropped. So now that's SPY. You'd think with the 15 cent higher at 1251 with a 50 delta, that call should really be about 7.5 cents higher. But instead, it dropped 18 cents. So what causes this? Look at this yellow line up here on the left side. All right. When the stock shoots up like this, what that means is there's an influx of demand. Somebody, maybe a mutual fund, an institution, maybe just a lot of retailers, maybe it's just right out of the gate and a lot of pent-up demand for whatever reason, it doesn't matter. There's a lot of demand that's pushing the stock higher. And as a result, the option is reflecting that higher price. Okay? So here's what happens. As demand shoots up, so does the price, and it goes up very fast. So if you chase it up, you're going to get filled at some point. In other words, if the option costs you, $4 and, $4, right? $4, you put an order for $4 because that's the ask price. And then you look at it against now 405. It says, oh, I got to change my buy price to 405. Then you change your price rate, you change your buy price to 405, you send it to the market, now it's 410. Oh, it happened again. You go back, change the price to 410, now it's 412. You change the price to 412, and you keep going up and up and up until you get filled. But when do you get filled? When the price has now found some resistance and is coming back down. That's not what you want, because oftentimes when that happens, right, the market keeps going down because now it hit that resistance and a lot of traders are selling and they're attracting more sales than purchases. So now you see the market tumble. And here you are having paid top price for a call option and you're sitting there wondering what just happened and probably looking back and say, I can't believe it. It happened again. I did it again. What's going on? So you don't want that. That's not what you want. What you should do is this. As it shoots up, buy it for a couple cents higher than the ask. That puts you to the front of the line. You'll get filled. You'll probably get filled, depending, of course, maybe 2, 3 cents, maybe even 4 cents. Yeah, it's anti, intuitive. It's counterintuitive is the word I'm looking for. Counterintuitive. Wait a second, you want me to pay more than what it's worth? Well, actually, you're going to get into the front of the line. You're going to want, if you want to buy it. So if you buy it, then immediately put it up for sale, ride it up, because now you did get this, you did pay a little more, and this is what a lot of traders are doing, right? A lot of traders are doing this, so that's why they're getting it. That's what's pushing the market up. So if you get in there and you buy it, now you're riding the market up until it hits that resistance, and then it comes back down. Find out where that resistance is. When the stock hits that, make sure you sell it, dump it, get out of it. You will have made some serious money on the market. Never chase it. All right, never chase it. It's not a good idea to chase not a good idea to chase it. I discovered this drawing tool and I really kind of like playing with it. Never chase it. All right, wait for the next opportunity. Opportunities come and go all the time. And that is my 2-minute tutorial that I think probably took closer to 5 minutes. All right, let's get into some questions. Questions. Oh, I'm going to scroll up here. Give me half a second to skim over these. If you've written me a nice long essay, I probably won't be able to get to your question because I'm just trying to get some real quick questions here. Okay. Trying to do most comments in advance. I have to tell you on myself, I was in the pick of the day Friday, got in the trading room, was hearing up and had a number of candles up, so cut off. Put the sale up early. Of course, they got up a full 6% profit. Okay. Let me see. Yes, we'll have the dancing girls, no problem. Okay. Right to the yes, the so Aaron has his beta meeting on Fridays. But he skipped last Friday because he's actually traveling, so he wasn't able to do that last Friday. Okay, and I never speak too fast. Okay, okay, yes, I listen. Yes, this is recorded, and it will be should be recorded and put on YouTube. And oh, this is kind of cool. Yeah, I should tell you this. If you don't know this already, I'm sure you do because you guys are probably more tech savvy than I am. So if you're ever watching anything on YouTube and you find that, they're kind of going a little bit too slow, or you just listen faster, you can actually change the speed on YouTube. You'll find a little, I think it's a little cogged wheel or something. Click on that. You can adjust the speed and just take it up to 1.5 speed or 1.75 speed or something like that. And this way you get through that podcast or the YouTube video much faster. So, all right. Question about the winning percentage of the pick of the day versus the signal. They are both in around I'm not sure what the latest is. I want to say 92, 93% successful rate. Pick of the day and the signal. Okay, I'm going to go over that in a second here. Let me just go through some questions. I'll get back to some more questions. I wanted to give you some of the offerings that we have because we have a lot of questions I want to get through here. The Zoom link will be out. If it's not out yet, it will be out shortly. So if you do not have the Zoom link for the trading room by say 9 o'clock in the morning, let us know. We'll get it out to you. But you should have it out later on here tonight. Okay. Actually, Aaron is the one that sends it out, and I'm sure he is aware of it, so he will be sending it out if it hasn't gone out yet. Don't know if it has or not. Let me take a look. I might even be able to find out and let you know now. Let me just see if the link has been sent. I know he usually sends it out right around now. And yes, he has. Whoever wrote that in there, I think it was Sandy. The link has gone out. So check your email. So here's the other thing concerning that. If if you are expecting an email from us and it doesn't appear in your inbox, don't just jump all over us right away as if it's our fault. Maybe it is, maybe it isn't. Check your junk box, promotions box, spam box, whatever. Sometimes email servers like to put our mail into those other boxes. So the easiest thing to do there is take our mail, move it over to your inbox. It should actually teach your server that no, this email belongs in the inbox and put it there the next time, Mr. Server. Okay. So and then if you still don't have it, then let us know. All right. Okay. Yes, we use simple calls and puts, no spreads. I used to do spreads. I mean, a lot of us I'm sure did, and maybe some people still do. But here's the thing with spreads that I noticed, and that is that I found that we had to watch these very carefully, and sometimes you have to roll them over into the next strike price, roll them over into the next month, and everyone would be kind of excited if they made 5% a month. I'm scratching my head. 5% a month. Frankly, we don't get out of bed for that. I don't want to sound arrogant about it, but I think that's a lot of work and risk for not a lot of money. And the other thing that really kind of got me turned off of spreads is that they're kind of dangerous. It's very easy to make a mistake because they're multi-legged trades, right? You could have 4, 5, 6, even more different legs that you're dealing with. Different, you buy and sell, different strike prices, calls and puts. And it doesn't take much to make a mistake. Even if you're an experienced, seasoned trader, it's very easy to make a mistake. So, and the other thing is that I scouted around, looked to see who's actually in our group making money on spreads. Is there anybody? And I sort of put my feelers out, sort of generally out there, and I really couldn't find anybody who was consistently, successfully making a lot of money using spreads. Now, maybe I just wasn't swimming in the right circles. I don't know. But when I got back into just straight calls and puts, I found that I could control it a lot easier, manage it a lot better, and end up making some pretty decent money. So, okay, so all right, Darlene. Oh my gosh, I've been doing the pick of the day. I'm down a lot. I've been holding overnight, sometimes 2 days. Okay, I can't go back to training rooms. I work full time. I need help. Any suggestions? Okay, we have been in some trying times. And with the market going generally to the downside, I don't know what time you're getting in, Darlene, into these calls or how much you're trying to get. I would suggest that, first of all, slip back into paper trading for a little bit here. And this is what I do. I do this too. If I have a loss, I generally slip back into paper trading for a little bit, kind of get my bearings, and then it's really too bad you can't spend any time in the trading room. And then there's a way that we repair trades gone bad, although we have not done that for the pick or the signal, but they've actually been pretty good for the most part. The pick has been challenged in late, but so when you tell me how much you're down here, it kind of scares me. I'm thinking here, darling, you're actually putting in a lot of money. I don't want to see you investing a lot of money. The rule number one with money management is never invest more than you can afford to lose. All right. So, first of all, I would suggest slip back into paper trading. And then when you have, say, I don't know, 10, 20, 30 good paper trades, when you're comfortable with it again, all right, then slip into transition into real money, but go easy. Go easy. You don't want to go. Okay. So, here's the thing. It doesn't matter what program, ours, anybody else's, there will never be a system or a program um, or a black box, right, which is a computer model, that will always be 100% right every time. And if you think about it, it's simple. Why? Because if it was, somebody would, that system would be so automated and big money would be trading it, and it would influence the market so that the volatility will be flattened out. If I can make myself clear on that, there'll be no opportunities to make profits and losses. You need that volatility to make money. So there'll never be, and the market is just an aggregate of the entire, all the traders, all the investors, their whole mindset. So there's never going to be something that's going to be 100% all the time. If we're pushing 90% plus, that's excellent in the trading world. And I say that because, and I'm sure many of you have heard some of the radio commercials on, I think Fox has them, maybe some of the other media outlets have them. You hear these companies. I heard one a couple days ago. They're flaunting their 75% success rate. I'm saying, really? 70? If I'm only right 75% of the time, I'd be looking at bankruptcy. Really? 75%. You think that's good. What about the other 25? What happens to the other 25%? Well, they don't talk about that. Well, guess what? We do. Anyway, if you can jump into the trading room, I would really highly recommend that. All right. And I'm new with this. No experience with puts. Are we supposed to buy to open or sell? And what do we expect to happen as price changes? Okay, all of our trades, and this is really important. If you do this wrong, you could be in a really bad spot. The way we trade, you can only lose what you're putting into the market. The way we trade. All right. You got to take that sentence in its entirety. The way we trade, you can only lose what you put into the market. Okay, so would you always want to buy to open first, whether it's a call or put, doesn't matter. If you expect the market to go down, you buy a put. If you expect it to go up, you buy a call. Buy first, then sell. Buy to open, sell to close. Never ever sell to open. Do not sell to open. You could be getting into a very high risk trade. Okay, possibly a naked position. I had the situation happen to me before. One of my students, Amber, wonderful lady, And she actually learned our system, was doing very well. And then she approached me and said, "Oh, Hugh, I got a new strategy." "Oh, what's that?" "I'm selling naked puts on FFIV." I said, "Amber, I want you to stop that." "But I'm making money." I said, "Amber, you're making money now, but one day FFIV, which is a tech stock, it's going to drop. You're going to get a margin call." "Well, what's that, Hugh?" And I told her. She didn't believe me. I said, "Amber, I forbid you to do that." "But I'm making money." Oh my gosh, I couldn't believe it. Anyway, she called me sometime later, crying, crying, crying. "Oh, I got that margin call you're talking about. Oh my gosh, what do they want, Amber?" Can't remember what she said, $45,000 or something. I said, "Well, you have a choice. Either you put the money in the account," they gave her until the next day, or they liquidate her account. Well, she didn't have the money. They liquidated her account. She's no longer trading. And the irony is she was actually doing very well trading SPY the way we taught her. You know what? You can't you can't help that. I can't help stupid, right? I mean, I don't know what to tell her. Uh, I like her as a person, but if I could have just grabbed her hand and taken it off that keyboard and say, "Do not trade naked puts. You're going to ultimately lose." And she lost. Anyway, um, all right. All right, let's get this. Here's our offerings. We've got a few things we're going to kind of quickly go over. We actually have some real solid gold, learn and earn, actionable plans you can do right away. And this is only available through DayTradeSPY. Let's start with the inner circle. Every morning, we send out a morning market analysis somewhere around 9:15-ish, 9:10, 9:15, somewhere in there. We also send out a follow-up report later in the day, early evening, something like that. And we all as to what we actually did, okay? And we also, and these are very brief reports. These are not long, extended, long reads, nothing like that. A minute or two to read, that's it. We also have our Tuesday night interactive meetups. These are recorded in case you miss them, and you can ask questions here. You can even email your questions in. We'll address them during these sessions. And if you cannot make it for various reasons, I know that if you're in Europe, this is like the middle of the night for you. Quite possibly Middle East, Australia, New Zealand, whatever. Could be middle of the night. I'm not really sure. But this cost is $9.95 a year or $2.75 quarterly. Basically, a cup of coffee and a donut a day. Very valuable stuff. You're going to learn a lot of stuff with these sessions. Again, you can ask questions and interact with us during these interactive meetups. The Day Trade Spy Signal. You're going to get this email to you and cell phone texted to you 3 to 5 times a week. Algorithm based. And the idea here is as soon as you get this, you buy immediately. Within a 2-minute range, you want to buy this, get in, put it up for sale for 5% gain. Now, if this is not sold by 4 p.m. at close, you're going to sell it at market close. We did a lot of testing on this up until we released it, and it works exceptionally well. So I just want to color in this some spots that we missed here in the yellow. There we go. The cost for this is a very modest $14.95 a year or $3.99 a quarter or $149 a month. We have a lot of people, they start with a month and then they soon jump over into a quarter or the full year. It just works extremely well. Right now, here is the trick. And I'm going to tell you, actually, I'm going to tell you about another product that we have. By the way, you get a 14-day, 100% money back guarantee if you don't like it, okay? As the case with pretty much all of our trades, all of our products, I should say. Pick of the day. This is a daily pick determined by Aaron and myself. We discussed this before the market opens, and this is emailed to you at just after 9 o'clock in the morning. Now, lot can and does change between 9 and 9:30, but this is designed to be purchased immediately at the market open. Make sure that the 1-minute candle is going in your direction when you actually get into this trade. And wait a few seconds for the bid-ask spread to settle in nice and tight within 2-3 cents of each other. Okay? If the 1-minute candle is going against you, wait until it turns around. You'll get it for a little bit cheaper. What we do is when we determine this particular trade, it may be held overnight. It is a longer term. Not when I say longer term, it's not really long term. Usually, you get your 6% gain very quickly on this. Usually within a few minutes. But if you need to hold overnight, you usually can. All right. Now, again, be careful with this, and just like all trades. And if you are on a roll, by all means, go for more. And most people do. They go for more than the 5 or 6% get they'll cancel, a sell order. We only use these percentages, 5% on the signal, which is designed for the active trader. And if you can't watch the markets all day, and the pick of the day is if you just want to get it right at the beginning of the day, it's anchored in time. So what we're saying is, we combine our technical and fundamental analysis, and we determine, is the market probably, is there a propensity to go to the upside or to the downside, and that's the direction we pick. We pick a particular option, and it's emailed to you, and you just simply trade that option, buy it at the market open, put it up for sale immediately, come back later and collect your profits. Now, if you are paying attention and watching this, you can generally get, like I say, a lot more than that 6%. $14.95 a year or $3.99 a quarter. Again, 30-day money-back guarantee for this one. Our trading room. This is our signature product. All right, hosted by myself along with Aaron, two experienced hosts with combined over 40 years market participation. We have been doing this together. Well, not together. We've been doing this a long time separately, and we've been doing this now for a year and a half, 2 years almost together. So these are interactive sessions just like this, learn and earn, fully narrated. This is where our strategies come alive in real time, real market conditions. Daily, 9:20 to 10:30. We do not monopolize your whole day. This is an event. You're going to get there just over an hour long, hour and a quarter, $6.99 a quarter, 14-day, 100% money back guarantee. This is the best value. If you already know what calls and puts are, this is where you need to be. This is a learning tool, all right? And this is actually an excellent thing to do. A lot of people actually they customize their lives around this trading room, folks. I know several people. They work like in an office environment. They actually go in the office later, and and they and they stay later. They don't actually you know they tell their boss, I got to do this. This is something I got to do every day. I even know some people who've got their bosses on this, so it's not a problem, right? The Ultimate Trading Workshop. This is a program we did a few months ago, and actually some months ago. It's recorded. You get 11 recorded webinars, each about an hour and a half in length. Everything we do is on here. When you go through this, you will be very well equipped to get in there, jump into the trading room, do this yourself if you want. You're going to get everything because we teach what we trade, trade what we teach. And you're going to learn options fundamentals, money management, all technicals, all our strategies, everything. This will have you gain confidence in your trades. You're going to learn how to repair trades gone bad. You're going to master Aaron's deep dive analysis for much more than just these scalps that we do. Special price $9.95. And I say that because this is actually subject to change. I tell people this every week. I'm just happy that the IT people do not hear this webinar. It's Sunday night. They're probably watching, I don't know, TV or something. They're not here. So they don't watch this. But this was never supposed to be $9.95 for long. It's supposed to be a 2-week promotion. But they never bothered to take this off the website. So you want to go onto this website, folks. You want to go right here onto the DayTradeSPY website, and right up at the top right corner where it says Ultimate Training Workshop, and I'm assuming it's still there for the same price. Click here to learn more and scroll down to the bottom. Yep, look at that. It's still there for 90. I can't believe it. Okay, but I'm not going to tell them. Hey, folks, I'm going to tell you right now, this is the best deal ever. Less than $1,000. You are going to learn everything we do. 11 hour and a half long, webinars, videos, and you can stop, pause, fast forward, rewind, view it as many times as you want. Now, we say to everybody that you are guaranteed at least 6 months access to this, but the reality is we have yet to dump anybody off of it. We just don't. They don't dump anybody. You got to grab this, folks. If you're serious about trading, spend your money here first, learn everything we do. That's really where it's all about. I do not believe there is money back guarantee on that. No, there would not be. All right. Once you got that course, you got it. And you should really learn it. In fact, I tell people just the first time, just go through it once and then go back and view those special sections that you want. And here's the other thing that was really special about all our online workshops. We've got other workshops there as well. Not just the workshops, but the ultimate training course. Here's the beauty of it. There are a lot of little nuances that we talk about. A lot of little things you might not think are important, but they are. Okay, sometimes we divert away from something. We'll tell you a little, a little secret, a little tip, trick, trap. We tell you all that stuff. That stuff's really important. It's those little things that mean a lot in this business. One simple little thing. For example, a lot of people think the stock market's their adversary. It's actually not. It's your best friend. You know who the adversary is? That person in the mirror. Your ego. That's what's the adversary. Your ego, your fear, your greed, your ego, your FOMO, fear of missing out. Your was it uh you only live one YOLO, you only live once. These are the emotions that rule, Intellectually, you might know that, oh my gosh, I know exactly what to do. Emotionally, you find it impossible to pull the trigger. You find it compelling to continue to get into trades over and over and over and over again, like a gambling addiction. That's why most people lose money. You see, there's actually two pillars of success in this business: making money, which a lot of people can do. I know most people can make money on the market. It's keeping it that's the problem. That's the other pillar, keeping it. Oh, I made a lot of money, so I keep gambling and gambling. I call it gambling. I keep trading and trading. You keep trading until you lose it all. You blow it all out, right? Can't keep it. I got a lot of horror stories to tell you about that. I'm not going to get into all that. Let's get back into more questions. I don't want to keep you all night. It's 9:11 right here. I promise myself I'm not gonna hold you ransom here all night. So let me just take a look here as to where is my song? Hang on a second here. I just got to do something here. All right. I have to stop this here. Okay. That wasn't meant to go that way. I was trying to cue something up here. Um, okay, that's what we do. I thought I had it. Let's get to some more questions. Questions. Trading since 1982. Oh, you should be teaching this stuff, Mr. Bob. Jeff S. I am both new here as well as to trading. All right, look, if you're new to trading, we got that ultimate trading course. If you know what calls and puts are, jump into the trading room. I guarantee you're going to learn something. And if you don't learn something there, you can get your money back. All right, you're not going to lose. And yes, we have a lot of elderly people here. I find that, you know what, it's unbelievable how many people in their 80s are trading. I love you guys. This is what I like about trading. It actually keeps your cognitive skills sharp. I've talked to this one gentleman, I think he was like 95 or something the other day, and he can talk circles around me. Seriously? Oh yeah. Um, Pretty cool. Uh, Jeff K. I feel a lot of times wasted on these repetitive introductions. Jeff, I say that because I want to set the stage so that you guys understand. A lot of new people on every week. We got all kinds of new people on, right? So I ask for your indulgence to those of you who've heard this before, but we want to kind of set the stage as to who we are. We're not just some guy who had a stroke of good luck one day and suddenly become an expert. There are a lot of guys out there, a lot of charlatans. You got to watch for those charlatans. They had a home run by accident. They think they're experts. They lure people in, and anyway, we're trying to show you where we're coming from on that. So, but that's what that is here. So, all right. Phil's saying happy Passover. Yes, Passover's coming up, right? When is that? What are we here? I don't have the calendar in front of me. All right. Okay. Thanks for this, Simon. Simon up and using the service of the past 2 months with spectacular results. Until last week, when all the gains were lost and a few thousand added to the pain. Ooh. Is this typical, and will the gains come back by staying in the course? Yes. Okay, let me explain this. The road to success is not a straight line. Can you see this camera? I don't know if the camera's showing you. It's not a straight line. It zigzags. It goes up, it goes down. Sometimes it goes down a lot, then it goes up. I'm all over the place with this camera. Sorry about that. It's a long and winding road to success. And yes, you are going to have some losses. So here's the thing that a lot of people do. They start trading 5 options, they make some money. They up it to 10 options, they're making some money. They up it to 20 options, 30 options, 40, 50 options. They tend to do very well, then they go all in. They go all in, and then they have a loss. Except, they've got 100 contracts and they have a massive loss. Well, what do you think happened? They not only lost all their money, but they lost their confidence. A lot of times they're out of the game. So here's what I suggest. Start with 5 contracts, go up to 10 contracts, maybe 20 if you're well heeled. Build up your account a lot before you up your number of contracts. Stay at maybe 10 or 20 contracts for the longest time because you can go in and out. Let's say you went in with, say, 20 contracts and you made 10 cents. You just made $200. Wait for the next setup. Another 10 cents, you made another $200. The next setup, another 20 contracts, 10 cents, you made another $200. It's 11 o'clock, you made $600. The most you had invested was 20 contracts at any one time, right? So that, I think, is very, trade small, trade often. That's, I think, very key. All right. Okay, so all right, I'm just kind of going through some of these here. Okay, so here's the thing. Some questions, something if I'm kind of, and again, I'm skimming over some of these questions here. They're saying that, okay, so you make a little bit of money making 5%, 6%, but a bad wipeout could cost you a lot. How do you make up for that kind of loss? So, okay, so when we give you these trades, they're actually high probability trades. We do a lot of pre-market assessment. We look for the setups. There's a lot of things that go into it, and that's not what this webinar is for. It's teaching you that. That's for the trading room. These are high probability trades we get into. So we use those 5 and 6% targets as a minimum. But when you're in the trading room, you're going to learn how to make much more than that by writing it up. Okay, writing it up. We tell you when it's a good time to get out of it. And some people walk away with some really spectacular double-digit gains. All right, I think that's really important. And we also tell you how to make those safer trades instead of the high risk trades. Yes, some people are taking high risk trades, and I take high risk trades. I make some money, but they're also high risk, and you can actually lose a lot. So I like to, especially when I'm in sort of a funk, and everybody gets to know funk sometimes. All right, we all get into a trading funk. That means that just seems like I can't do anything right. Best thing to do: slip back into paper trades, get your bearings right, regroup, and then then get back, ease back into it. That's the thing here. Okay, Bill S. for your eyes only. Okay. All right. No, always, keep going, guys are doing okay. Okay, there's a lot of good questions here. Why does SPY move after market hours? And do you technical trading or base bull and bear plays on a lot of that impacting financial calendar? All of that, all of the impacting financial calendar. I look and see where's the market going. Okay, so we're not smart enough to know where the market's going to be a year from now, 6 months from now, or even a month from now, not even a week from now. We might think that the market's going to be up a week from now, and all of a sudden it's down. Why is it down? Because all of a sudden Iran's shooting, drones over to Israel. Israel's fighting back, and oil's going up. Inflation's threatened to rear its ugly head again, and the Feds are threatening to not cut interest rates. This is how it all works together. This can happen in a matter of, hours or days. So we're not smart enough to know what's going to happen even a week from now, but we're pretty good at determining what's going to happen today and maybe even tomorrow, depending on what news is coming out. So I think it's really important to kind of see, just trade for what today is and let tomorrow be, another day. And I think that's really important. So, but we do look at after hours, pre-market hours. These are trades between brokers, and they still invoke support resistance levels, chart patterns. That these are the things that we use. Da, 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 da. Okay, yeah, there's something. Now we got some comments about the whole Israel Iran thing. U.S. gets involved. I don't know if we're not going to get involved, but if we get involved, China's going to get involved. China's going to feed arms to Russia, who's going to continue on with Ukraine. That thing's just not coming to an end, or what? Oh man, unbelievable. AI is another one, right? Artificial intelligence. And this is something here. I heard last week that AI is trading nearly 80% and it knows how we think. I don't know what's going to happen with AI. I'm not to the trusting. I have fun with it. You can write poetry with it, different things. I'm not sure how I would treat that with AI. With my trading. Um, I don't know that much about AI. And not that I would trust my hard-earned money with an artificial intelligence kind of thing. I still like to be in control. For the same reason, I would not let a Tesla or any self-driving car drive. I will do the driving, not the car driving me. All right. How about a Tasty Trade webinar? Tasty Trade does not have a SIM account, so that's a little tough to do. I'd have to just do little screenshots, I think. Okay, Bob, thanks for the series. I'm extremely impressed. If you end the 2 to 10K challenge, not in a loss. We're working on it. We're working on it. Hopefully we're gonna come back to some, but we're gonna keep working that, get that out of the fire here. Question here, why don't we have any put recommendations? We do in the trading room, and in the pick of the day, we are doing more puts. We had a bias to calls for the longest time. All right, because markets like to gravitate up, and if it's a put, markets, if they go down, it's for a reason. And very often, in fact, all the time, markets will go down. They will definitely find a level of support. The question is, where is that support? Is it low enough that you can make your profit? Is it going to come down, find support, and then shoot back up? And when I go back into my own log and I see where the my problems were, most of the time it was with puts. So that's why I have a bias to the upside. Okay. Okay. Simon saying 143,000 a year based on that thing I told you about earlier. That's assuming no losses on any one day. Well, and again, that's based on only 10 contracts, and our losses do not go to zero. Okay, I can't remember the last time a loss went to zero for me. We don't take losses to zero. Um, and so we do there's a place where we cut our losses, and that was just based on if you only had 10 contracts, like I said. So um, how do you manage losses? Okay, good question about managing losses. Uh, we don't use stop losses in this strategy that we use. I found that with stop, and I used to do them a long time ago, and I found that I'd get stopped out almost every time. Now, maybe my stops were too tight. I don't know. I don't recall. I just know that I lost way too much using stops. Stops on SPY options simply don't work. You think that they would. Theoretically, it would sound good, but that's not the way it works. When we get into a trade, we generally have enough time, right? So the stock or the option is going to vacillate. It's going to go up and down. Just because it's down now doesn't mean it's going to stay down. And here's the other thing. A couple things. First of all, the second you buy an option, you are in the negative. You're in the hole. Simply with the bid-ask spread, you're in the hole. So, and the markets have to breathe. The stock option has to breathe, right? It's going to go up, it's going to go down. They don't go in straight lines. They go up, they go down. You're only going to lose if you sell for loss. If you give it that opportunity, that chance to breathe, it'll go down a little bit. Maybe it'll go up right away. It'll come back down. It'll go down, it'll go back up. These are longer out options, so you have that time. Let the market vacillate, let it do its thing. If it goes against you, it's like a crying, screaming 2-year-old. It has its temper tantrum. Best thing you can do is just sit back, relax, let it go through its temper tantrum. Once it settles down, it'll gain its footing and start going back up. You're going to make your money. Now, let me ask you a question. How many of you have stopped out on a trade, right? So you took a loss, you took a 10, 20, whatever percent loss, and you kept watching the option as if it's still yours, right? You're out of the trade, but you're still watching as if it's still yours. And then 10, 20 minutes later, you see it going back up again. Now you're going, oh my gosh, are you kidding me? Had I stayed with this trade, I would have made 30, 40% now. Has that ever happened to you? Um, and that's why. Okay. So, and that happened to me. I thought, this is not a good thing to do. That's not the way we do manage our losses. We manage our positions. That is not the way to do it using stops on. Now, maybe it works with stocks. I don't know, but it doesn't really work well with SPY options. Da, da, da. Okay, Dustin's asking here, why did the market freak out over the Israel-Iran issue when it wasn't really that big of a deal, with Iran being the seventh supplier of oil? I sadly lost a lot of money with this issue. The markets overreact. Markets get scared. It doesn't take much to instill fear in the market. Sometimes I think the market is just a bunch of insecure people with lots of money, right? And they're all in this arena. This is how they trade. They get worried. They don't know what's going to happen. All you need is some pundit on CNBC or some station saying, "Oh, well, it could be a World War III breaking out," and or who knows? They instill fear, and when you get a lot of people scared like that, then that's what happens. I better sell. I better buy gold. I better get back into gold. That's what that's all about. Um, it's just uh, that's just the way it is. So, what website has the best paper trading simulator? All right, so most of them do, but even if they don't, it's very simple to paper trade in pretend mode, even if your simulator doesn't have a paper trade account. So let me explain. All you have to do is if you say, okay, I'm going to buy now, just record that option value at the ask price. So when you're going to buy, you hit the ask, you should get it for the ask. If the ask is $2.35 at 9:45, that's your imaginary buy price, 235, 1045, right? Say and then see, okay, now so if I 235 add in 6%, so say 249 or 250, I'm going to put for, let's see when it gets to 250. And then you ride it up to 250, bang, I'm going to sell it. It hit 250 at 10 o'clock. There. 9:45 to 10 o'clock, I made my 6%. There's your paper trade. You can also go back and check the chart of the option itself so you can actually see where the option traded for. On Thinkorswim, in the symbol section, you can chart the option by simply starting with the period and then the symbol SPY, then the expiration date starting with the year 24, then the month 4 for April, and say the day, which is say 26, the Friday, C for call, P for put, and the strike price, let's say 505. So the code on that would be period SPY 240426 C 505. That's the 505 strike price expiring April the 26th. Okay, punch that up. You'll see the chart of the option itself. Chart of the option. You can see the movement of the option. Those are actual real trades. Now, the other thing with a SIM account, Thinkorswim has a SIM account, but unfortunately, a server issue, and I've talked to them a few times about it. Doesn't seem to be any resolution. It's a server issue. You're getting latent reporting on it. So you might think you're actually buying it for 250, but it'll come back and say you got to fill for 245 or something. The numbers don't seem to match up. I'm not talking about the 20-minute delay, not at all. The stock is the charts are real time, but in the sim mode there is a latency in the sim mode. It's just not updating up to the microsecond real time. So that's an issue. So the best thing to do is go on real time and see where exactly is the option now, and how do where's it going to go? So thank you for that, Norm. I love Norman B. I love this. You do a fine job, Hugh. You're a straight shooter, no BS, and I find that very refreshing. We try. Folks, I kept you long enough here. It's 9:29. Listen, stick around. The subscription page for the trading room will be coming up right after this webinar. So if you click on that, you should be able to subscribe. Here's another tip. If you go to our website, you're going to find some kind of expensive prices for our products. What you should do is this. Email customer service at DayTradeSPY and tell them you're interested in whatever program. They will give you the best price, the very special price for the time being. Customer service at DayTradeSPY. Been a pleasure, folks. Good night, everybody.